My name is Miranda Werstiuk, head of origination for Monetary Metals, which is a private US-based lender. A unique structure where we denominate our transactions in ounces, and we actually table metal into those transactions. So I'll try to weave that into our conversation today. But what I'd like the panelists to do is just to introduce themselves and sort of give an overview of who they are and what they do within the context of the funding universe and their expertise. Tamara?
Thanks, Miranda. Tamara Brown. I'm a partner at Oberon Capital, which is a charity flow-through product we'll talk more about later. 30 years in the mining industry, engineer. I've spent a lot of my time in M&A, both with juniors and with seniors, and then also as a CEO. So I've been through and understand the different elements of and how hard it is to access capital in this sector.
Patrick Chidley, 3PPB. We're a corporate development advisor for various companies, generally junior companies in the industry. I'm a geologist originally and formerly also a mining analyst covering the gold mining space.
Rob Stitt, Couloir Capital is my brand. We're investing in lots of these companies that are here at this conference and at other ones through a limited partnership called the Werstiuk Fund, which is my favorite ski run at Whistler. We own a private placement brokerage called Couloir Securities, and we provide analyst research coverage throughout the sector as well through Couloir Capital.
No. Hello, Bela, Onken, pleasure to be here. KfW IPEX-Bank. KfW IPEX-Bank is a commercial entity of KfW. For who you don't know, KfW is a German state-owned bank. IPEX is a commercial entity. For the Canadians, I compare ourselves to EBC. It makes it easier. I've been with the bank for a while in different locations. I've been in London for a while and now for 6 years now here in New York. I cover the US and Canada and with the focus supporting mining companies, particularly junior mining companies, with a focus on transitional metals, copper, lithium, the good stuff what we need to make the energy transition happen as a senior lender. And we focus on Canada and the US and happy to support some of your projects.
I think we're here. I mean, these events bring us together to talk about companies and opportunities. And just doing a little bit of homework last night, Ernst & Young has put out their forecast 2025 risks and opportunities in the mining sector. The number one risk is access to capital, right? And I think we've been trying to wade through that for over a decade, if not longer. And so this range of expertise and knowledge and living through multiple commodity cycles, I hope today that you'll get an idea of what's available, how we look at capital provision, and we'll go from there. So the other thing is, and I don't need to, this is just a sort of restatement of that metals and mining are critical to our existence, right? So we need to be able to identify the right projects with the right teams and fund them in a manner in which we can develop those projects within a sustainable framework, right? So we know we can provide the right capital to match the projects at the right time, essentially. So I'm going to start off with, and I'll sort of lob it out to the panel, and maybe we can start with you, Tamara, but the outlook on the current flow of capital into this sector. What does this look like?
Well, I'm going to start with a positive because I'm sure there's a lot of negatives we're going to talk about today. But I feel like over the last little while we've seen some progress with different initiatives. So obviously we all understand the spectrum of capital options available to the mining space. That's grown in my career, certainly. It's got more creative. There's been some positive trends where obviously, beyond the usual debt equity and then derivatives of all of that, we've got now governments starting to understand, especially with the recent transition to critical minerals, the interest in critical minerals. So we're seeing governments start to participate. We're seeing private equity start to have interest in the mining sector. Obviously, we all understand that fundamental disconnect between an investor's 3 to 6 month horizon, and then the mining industry now is averaging 25 years from discovery to commercial production. And so with those two different outlooks, we have got to search for alternative sources of capital. But I do think that we're making progress. My company with Charity Flow Through is a government initiative. It's a very small piece. It's in the junior exploration side, but we need to see governments participating more, whether it's funding metals exploration or the development of mines. And so we've seen some examples of it. I think we just need to see more.
Right. Super. Patrick?
Yeah, no, I think more would be good. I mean, I think Tamara works in the Canadian space. There's a great program there, which I'm sure many of you know, but not everybody really knows or understands it down here in the States, or certainly in Europe, where I have a project or a set of projects. It's a great program called Flow Through Funding, and basically takes advantage of tax, basically giving people tax breaks and allowing more easy the ease of raising capital for exploration and particular styles of projects, and that can be applied elsewhere. For example, in the States, or for example, in Europe, where in countries like Finland and Sweden, these are really prospective places. But there's a lot of high tax people there
Right.
who would be more incentivized to invest in the industry and in the science that goes into exploration,
Right.
If they were to give them these breaks. So I think there's some great opportunities like that around the world, particularly if governments do really want to encourage development of non-fossil fuel energy sources, which will require more metals, and also more metals from secure places.
Super. Rob?
Well, as all of you know, funding many of these companies has been difficult the last few years. We've come up with a new concept to fund some of these companies that have their projects close to production in a resource-backed secured note. The notes would be secured to the resource itself, with a maturity that might be, say, 7 years in length, paying LIBOR plus, maybe 4 or 5% with some upside torque to the metals prices, and these notes would be payable for gold projects. They would be payable both the principal and interest in gold. So that's one of the initiatives that we've been working on.
Super. Now, Bela, you and I come at it from a slightly, we're further along the development chain, but we'll get into this further into the discussion about project finance and lending. But what are you seeing? I mean, we at Monetary Metals, we have a very specific mandate, late stage development, near term production or production, right? So we are a lender in a very finite space with a finite amount of capital. But you are the bigger, broader fund provider. So what are you seeing? And maybe you can comment on the lending and project finance space.
Yeah, certainly. Touching on what Tamara mentioned, I would say yes, definitely positive outlook. I think there's a lot of appetite, a lot of support currently for funding projects. I think that there's a big awareness overall in the market. It's important to become more independent on the supply chain. So there's a big boost for Canadian, US projects. Especially you have, especially in the US and Canada and Europe, people don't want to be so dependent anymore on certain Asian countries. So we see a big boost in mining projects and capital provided for that, both from the debt side as well as the equity side. On the project financing side, I would say it's a two-tailed story. You see a lot of commercial finance banks who do not provide capital anymore, lending anymore. You still have a few banks like us who are very committed to that, and where we see mining as core, especially if it's connected to the energy transition. So for us as focus, and there are lots of what I can elaborate later on, government incentives as well, from the European government, from the German government, from the Canadian government, to support that projects. We work very closely, for example, with the Canadian EDC on several mining projects currently in development in Canada. Projects that on the one side will provide domestic supply to Canada, to the US, to become more independent from, let's name it, China. And on the other side, provide Germany and European countries with critical materials because there's strong strategic interest from Europe and Germany to secure that materials, and the German government is supporting it, and we are owned by the German government. We are operating as a commercial bank, but we work very closely hand in hand with the German government. And there are several schemes where the German government is supporting that on the debt side as well. Most recently on the equity side, where the German government actually set up an equity fund directly investing into mining projects.
Oh, interesting. Okay.
So I would say there's a lot of positive momentum. Yeah.
Yeah, and we like to hear that. As Tamara said, we want to hear about the positive. Everybody, and Rob and Patrick and Tamara, like there's been a real dearth of capital available for those early stage projects, and so that's a good segue. Like, we need a pipeline, right? We need to be able to fuel that pipeline to get to the point where monetary metals or our peers can step in, and then you to the next stage, Bela, because you talk about these large blocks of capital. So who's funding the pipeline? Patrick or Tamara? You want to start? Who's funding that pipeline?
Not very many people. It would be the summary. Capital likes to go to surety, so it usually goes to the more advanced projects or the closer to production.
Yep.
And so as you get down the chain to the juniors, to a lot of the companies here, there's fewer and fewer capital options available. That disconnect, the cyclicality and the volatility of the commodity cycles has created this lack and volatility of returns for investors. And so they've shied away from the junior space. So really what's available is some equity. So what we're seeing is that because the senior miners are being pushed to give a return, when there's a good commodity cycle, they're actually pushed to give dividends. That's preventing them from investing in growth that they ordinarily would have done. So they're not putting the money into their own greenfields exploration or development, and then they're forced, when the commodity cycle's upswings, they're forced to go and acquire it in M&A, which then puts risk on that capital return again. So it's this cycle that's happening. So on the junior space, I'd say that there is these seniors are taking toehold, so that's equity investments, government initiatives like the flow-through structure. So Patrick went over it briefly, but basically what's happening in Canada is back in the 70s, the Canadian government realised if we want to encourage investment in the Canadian space, we need to ensure people give money to the junior explorers. And so what they've allowed them to do is to renounce or flow through their tax deductions to the first investor of that share. And so the investor is incentivised with taxes, not only with the common share ownership. That product has grown and changed over the years, or 35 plus years, to the point that it became not usable for those investors that didn't want to get exposure to common shares. So then what was born was this structured flow-through product, which we now call charity flow-through. But it allows these juniors to access the capital markets with a 50 to 100% premium to their share price, which is, better than any of the other initiatives I've seen governments for junior exploration do. And I'd like to see us expand this in the industry, both Australia, US, Finland, etc., in order for the junior explorers to get access to the capital they need. Otherwise, the seniors are not going to be able to replace their depletion, let alone grow.
Right.
Yeah, Patrick, I agree with a lot of that. In fact, I think one of the numbers is flow through allows about $1 billion of investment into exploration in Canada. So it's a pretty important industry in of itself in that way. and with some really, really good results. I mean, they do discover some pretty great stuff in Canada, and that could be the same here in the States, and could be the same in Europe as well. So I think flow through is a great thing, but there's also other new mechanisms for funding. I mean, where we've had a problem is in junior mining. I'm sure most people at the conference here know this, is that many of the companies are only able to raise small amounts because they're doing it with friends and family, almost with people that are close to the company's existing shareholders, but they're not bringing in new shareholders very easily because the market's been very, very negative on exploration as a high-risk venture.
Yep.
Venture capital is one area where I'd say that there should be, companies should try a little bit harder to get into. There's a great venture capital industry in the States. It is expensive and difficult to access because it's really run by the tech industry. But I think that given the new need for critical metals to allow the world to get off fossil fuels, more and more of these tech funds, tech-based or tech-focused venture capital funds, should allow a little bit more in terms of mineral exploration to go in there. And I think it takes a stronger marketing effort. So basically, companies need to spend more on marketing to go out and actually access these guys in the venture capital world.
Right, and crossing that bridge between extraction and the usable metal on the other side, right? And that's all about, and that speaks to the bigger dialogue on education in and around mining and why we need it, what it does for the global economy. I had a conversation with my daughter a couple of years ago, and she's graduate engineering, but she sat me down at a table and Mom, what are you doing working in mining? And do you know what you're doing to the planet? All these conversations. And it took obviously she's evolved from there, but understanding the impact of what comes out of the ground and what we need it for. Plus that, it always seems that the problems we face as an industry are what are put forth in the news, right? So we really need to, I think, celebrate the goodness we do and our victories, and rather than somebody popping up and say, oh, you're a bad citizen of the planet, but we actually have huge positive impact in the communities we work in, on the environment, and creative solutions, creative financing solutions, right? So I think there's a lot to be said about communication and marketing and trying to bridge that gap. Rob, did you have anything to add about?
What we're seeing in terms of investments into many of these companies in Canada is they're led by a handful of big investors in Canada. And you've probably heard some of the names before, including Eric Sprott, Rob McEwen, Michael Gentili, Frank Giustra, Crescat Capital, and it seems like almost every second financing we see is led by one of these half dozen groups of people. And what these teams are doing is really taking a portfolio approach. They're not just investing in one of these companies; they're investing in 25 of these companies, and really looking for that right tail win that is going to pay very well. And this is the reason why investing in this sector can be exciting, is because those wins are out there, and we've had, although our capital account is smaller, but we've had some of those wins in the past year. Where we've made 15 times our money in 6 months, and it's just super fun. It's super fun.
Yeah, no, thanks for that. I think there's a lot to be said about on our end as investors, right? Identifying the right project, the due diligence required, spreading your risk with a portfolio approach like that. Like, I think that is that is critical to success, right? Bela?
Yeah, I mean, if I may add to that point, because I think it's an important point, what I'm seeing a lot, and I'm glad there are some people who are available to fund at the early stage, because I see really the challenge what we're facing, honestly, is we don't run the projects, unfortunately, very early. We come in once you have a feasibility study, once you have off-takers identified, the project becomes a viable financing, because, I mean, honestly, a bank, we don't get any upside like you guys. We don't get 15 times if it goes well. I mean, our upside is we get paid back. We don't lose money. That's our upside.
Yeah.
So that's why we have to be a little bit more cautious. But even some of the equity schemes that are out there, most of them, like from the German government, the new fund is only financing projects that are close to feasibility, by not funding like pure exploration. So I see it a lot, and when I'm talking to companies like you, lots of companies are exactly missing that last mile, or to get that final funding to get to the feasibility. They have wonderful projects, lovely projects, but they need that last mile of funding to get to fund the feasibility, all the drilling. It takes a lot of money to get there. Once you're there, I mean, it's easy. You get the money. You get the big equity checks. You get the debt financing. But that's a challenge, and that's what you said earlier, where you have really more creative solutions like venture capital. You need a bigger pool of capital, and that's what I see there's a need in the market.
Yeah, I mean, I definitely will agree with you on those points, and I think one of the things is that there is quite a lot of money that's really seeking the highest quality, most advanced projects in the lowest jurisdictions. Yeah. So there's no problem sourcing money for that, because everybody wants that. But when it comes to early stage exploration, even with great projects and great jurisdictions, it's tough to get money, and and that's where there's great opportunity for investors. And we know that many of those projects are relatively well defined already, but they're trading on 10 cents on the dollar type of numbers, and that's why you're able to make 15 times.
Yeah. But Tamara, I wanted to ask you a bit more about charity flow through, and because that, or the flow through structure, because that that could be applicable to jurisdictions like the United States and Australia, and the mechanism. Like, how do you identify, like, what are your milestones or gating steps in terms of funding a project from a flow-through perspective?
Sure. So the Canadian flow-through structure requires that the front-end subscriber be a Canadian citizen, but the back-end buyer of the common share can be located anywhere in the world. So this is what it's done, is it's opened up access to worldwide capital, and the Canadian investor is simply providing that premium. And so what we've done is we've structured the product such that you have the highest bidder for both of the individual pieces, which is a tax credit and a common share that you're selling at the same time.
Right.
This is a very simple thing for the government. It basically, they're actually creating additional tax revenue, because this money is being spent in remote areas in Canada. It's creating jobs. People are paying taxes. Assets are being discovered. Malarctic, Great Bear. None of these assets would have existed or been discovered, if they hadn't had access to this kind of financing. So it's an initiative I'd love to see governments take up elsewhere. There's other things that I see differences on, and these are government initiatives. So, for example, in Australia with superannuation, our pension funds, they're captive. Majority of the funds are captive in Australia because it's a resource sector that generates capital access and flow to the Australian industry that Canada doesn't have, for example. Canada, its pension funds are not captive, and so have gone, obviously, where the capital goes to, US, obviously, a lot. And so these are simple decisions that governments can make to make their countries more competitive, whether it's flow through or whether it's how much of the pension funds stay local. I'd like to see more of that. And I think that you have to, if you're going to protect your own resources in your own country, why wouldn't you put your treasury to work at that? Right. So, and whether it's I know that there's a number of critical minerals funds in the US and Canada and Australia. I think Canada kind of puts the cart before the horse. They recently announced a large financing for the battery manufacturing.
Yeah.
And you're like, well, what about the supply of the materials needed for that? So I think that the governments can take a larger part here in order to provide this gap in capital we clearly see.
Right. And actually, that's a good segue for Bela, because you and I talked about the project finance and the critical minerals and the offtake piece, and maybe you can elaborate on that a little more. Yeah, as part of this discussion about governments and institutions getting involved, right?
Yeah. Sure, and that's what I mentioned earlier in the introduction. So I mean, there's a strong from not only the German government, from several European governments, strong schemes basically to promote the procurement of critical materials to the countries. So the German government, where we work closely, but we also work with other European governments. We not only work with the German government, of course, also with the Finnish government very closely, with Finware, which has a very good scheme. So there are basically schemes available which are tied to the off-takers. And that's why I always tell junior miners, think early about your off-taker, because the off-taker is not only someone who you're selling to, but is also critical to secure your financing at an early stage. So most of the mining companies actually we finance. Basically, we work very hand in hand with the off-takers, some big European off-takers, German off-takers, European off-takers, and respective governments, because there are schemes from the German government, for example, if certain materials which are necessary for the German economy, such as copper, lithium, all the good stuff, what's needed for the energy transition, are exported to Germany with undermined by a German offtake agreement. So financing is eligible for cover from the German government for up to 80% or 90% in some cases, which makes financing much easier. And we are acting as a commercial bank, but we would arrange a loan, which can be a substantial loan, which is covered by the German government, largely covered to 80 to 90%. And then the loan is usually a long tenor, which is good, which is helpful. So it's like a 10 to 12 year loan, which is unusual for a commercial loan. So which helps to improve the equity returns, which makes it easier to attract equity investors, because if you don't have to pay debt back in 5 years, but have like 10 years to pay back your principal, that leaves much more money for the equity investors and brings up your rate of return. So that makes it more feasible for equity investors. And so that's one of the schemes we usually promoting, and we apply to many of the financing, which can be substantial tickets. And as I said, I mean, it's a 10 to 12 year financing tied to an offtake, to a European offtaker. And some such beneficial financing conditions apply. In addition, I mentioned earlier, there are schemes from European governments, not only the German government, but several European governments, where European governments directly invest equity in mining companies. The German government just launched recently an equity fund, which is managed actually by our parent company, KfW. So happy to share some information if you want, where basically the German equity government is providing equity checks of at least $50 million, between $50 and $150 million, invested directly into the companies that basically supply Germany with materials.
Yeah, and that's for us at Monetary Metals, offtake, we focus specifically in gold and silver. So offtake has become a key component of our funding structures, right? So we have an opportunity to go to a near-term producer or somebody's looking to expand production in gold and silver, where we can say, look, we can come in and we look at offtake, either as a partner, as a financing partner, or we can secure that offtake and work with the company to find the best metal flow. Right? So that's become a more interesting piece of our business, is trying to find that balance. But Rob, I wanted to, we just talked briefly about this resource, but I'm curious. I know you said it's in a nascent stage, but I think that's a very interesting, given the monetary metal-backed and funded business. I mean, is this to fund, obviously, exploration, but you need to have a resource in the ground? So maybe just a little more detail on that would be interesting.
Yeah, so the concept of these notes is that they are secured to the resource. So it would be there would be tradable notes, and I guess maybe the best analogy might be to have a royalty that individual investors would be allowed to invest in, and that's basically the concept. And the notes are secured to the resource, such that if it doesn't become a mine in the future, that the note holders would have legal remedies to go and take the project back.
Well, that's interesting, yeah, because years ago I was working with a colleague in Toronto who was trying to look at fractionalizing royalties so that an individual investor could actually participate rather than just have a large entity say, well, we've got that 3% royalty, but actually trying to divide it up so you could actually sell a piece of it to an individual investor. So that's really interesting, and it's obviously a global. You could do this for companies globally, right? And your due diligence, obviously, on the front end would be key to that.
Yes. So the concept is that once the structure is created, it would be repeatable.
Right.
So
yeah.
Different types of projects, different resources, all with the same legal structure.
Right. So it's not
little tweaks for each.
Right. So not commodity specific. Like you really can. It can be a broad brush structure then. Sorry, broad brush structure. Yeah.
Interestingly, we're dealing with a company now operating in Ethiopia. They have a new mine ready for construction. They're putting together a financing package of about $320 million. And part of that financing package is proposed to be locally in Ethiopia, where there are local investors who are interested in a product that gives them a gold-linked return. So basically, it's a little bit like what you're describing here, Rob, but this is going to be in Ethiopia and hopefully then listed on the new Ethiopian stock exchange there. So it's an idea that's doing the rounds, obviously.
Right, right.
And
well, maybe Keithy's going to be our first.
It could be. It's coming soon, so it's a pioneering kind of idea, and I think that segues into one other aspect about alternative financing. That's where I see changes. Is that traditionally we always think in the West that the money is going to come from Western investors or Western banks, but I see more and more coming from locally within the countries, like in Africa. We've got development banks there that are very, very active in funding their own industries now, including the mining industry, and local investors with money trapped inside the country because of exchange control, looking for commodity-linked assets instead of just in their own local currencies, which tend to depreciate quite quickly.
Right, and I think what's also important, that sort of speaks to building the appropriate capital stack as you're trying to fund these bigger projects. And I know, Tamara, you had, you've run companies, you've built projects, so maybe you can talk to that creativity and blending alternative structures into the overall capital stack, right?
Yeah. I think it's an interesting case study for this was probably taking a look at the lithium market and what we saw go from 0 to 100, and we saw a usual commodity cycle that might take a decade or more happen in a very short period of time. And what was very interesting was these lithium assets got access to capital faster than I would have ever expected. It did create that conundrum because what happened was the market said, excellent, critical minerals, we're putting our money into lithium, lightest, it's going to be a winner. And of course, all of us in the industries who's been a part of a commodity cycle before could see it happening before our eyes, and we did attract. we did attract different kinds of capital, and we attracted generalist capital.
Right.
And
Right.
unfortunately, we created the same situation again where the returns weren't there, after the lithium price decline. But more specifically to your question, Miranda, when I take a look at advancing from exploration through development, that's where you start to be able to bring in the creativity.
Right.
In the exploration, it is literally equity and government initiatives.
Right.
And then you start to get into joint ventures, earn-ins, structures, etc., where you're involving the seniors, getting involved
Right.
with the juniors, and they're participating in that capital piece, whether it's the joint venture or offtake or other earn-in structure. And then when you advance, I think, to the project build, the project financing, and these guys can talk about it more than me, that is where I'd say there are far more pieces, because it's the largest piece of capital.
Right.
And so the
Right.
build pace is where we, get into streams, royalties,
Convertibles.
converts.
Yeah.
That's right.
Yep.
Yeah, so I think that it'd be interesting if we could discuss a little bit about project financing,
Yes.
alternative capital pieces.
Right. And maybe Bela, that's a good, how, when you're looking at a project, how you build in those, is it, you obviously come in with the project fund, but blending in a royalty or stream or convertibles, like, we just came through a transaction where the incumbent lender had stepped a little bit outside their box of, royalty or stream, but also brought in a convertible and had access to, a pool of capital for the borrower, right? So they built a very creative funding structure for that last push. Yeah.
Sure.
Yeah.
Yes, and we encourage everyone to look at that as a different sources of capital. I said, we would provide the senior debt piece, but that is usually the last mile of the financing. And before that comes, of course, equity supported by government grants, and all, of course, streams is an important financing concept, which we see in many of the projects we finance are part of it. So it reduces, of course, the senior debt requirements. And as I said, we're happy to support the projects, but we tried basically to finance that portion that is of benefit directly to Europe or Germany. And of course, we want the projects also to be helpful to the local economy. So most of the projects, I would say, we have maybe a certain portion of it which is going to be exported, and the remaining part goes domestically, because the projects are just as important for the domestic economy and Canadian supplies or US supplies. And so it's several financing elements which are put together, and our financing piece is just one piece of it.
Yeah.
For example, in projects we're currently working on, we work hand in hand with EDC, which is providing a big piece of it, pretty much the same piece as we providing. So there's comes a stream piece of it, and so it all comes together to make it a solid financing package.
Yeah, and I think we talked about yesterday that you've done some work with the IFC, which is a big global institution, and I know from years back they actually tried to step into that early equity piece and just had a tough time wrapping their heads around it, because that's to your point, Tamara and Patrick, like that's a very different animal to funding, longer term lending, and the IFC has a very specific global mandate in their lending, right? So,
exactly.
People try to put their toe in that exploration water and then step back.
Hi, Sadzin, Monetary Metals. Quick question for you about the notes that you have mentioned, the secured notes. Are you in fact placing them yet, or is this a project for you that you're planning on embarking on?
We've got a number of projects under consideration. It's still in the concept phase, but we're certainly open to conversations with groups that think they might want to pursue this type of financing.
Okay.
Yeah.
Final thoughts on how you see the industry, capital, obviously I've always been positive. I've been in the business a long time. So start with you, Tamara.
Yeah, look, I'm very positive right now. Obviously, we're all watching a heating up equity market. That obviously has its consequences on the streamers, the royalties, and the other capital providers. But in the end, it's equity that's the mainstay of the industry. And so I'm very encouraged here that if we can, obviously with gold and silver at all-time highs, we've seen copper range bound, we've seen lithium come up and go back down. But whichever place you're participating in, I feel like we've approached what you could basically call a buyer's market.
Right.
We've seen the big boys come in, whether it's in lithium with Rio Tinto coming in, obviously very low lithium prices. They've made their stamp and said, okay, we see this as being a long-term play. And if we can get a little bit more momentum in that disconnect that happened between the commodities and the equities, I think that the returns the elusive returns that we were talking about are going to come. And so if today anyone who's here walks away with anything, I think this is a great opportunity, a great time to invest, that just really creates that nice momentum of adding more capital available to our sector. And hopefully we're at a point in the cycle where we can return very strong positive gains for investors.
Super. Thank you. Patrick?
I'd agree. I think we're at the low point, but just obviously this year I think things have started to pick up. So we've seen a number of companies, in fact, at the conference here, doubled and tripled their stock prices in the last sort of few months, which is healthy. But they're all coming off, unsustainably low pricing, which was really just bottom fishing. And there's a long way to go back up. I think if you look at the, a sort of a proxy index for junior mining is the TSXV index, and if you go back a couple of decades on that index, you'll see that we're still just bumping along the bottom, and this is just a blip that we're seeing now coming up. So there's a long way to go back up. A revaluation of mineral assets, let's say, and I think that as that moves forward, I think we'll see more participation from the major companies, more thought about growth, about the value of growth. I think there's a serious problem with some of the big major mining companies is that, as Tamara said earlier, that they're all being sort of encouraged to dividend back the money and not reinvest in their businesses, and therefore the quality of their businesses goes down. And I think the market knows it. The market, doesn't really like the mining industry in general. There's underweight mining across, most indexes, most funds underweight mining as a rule. And one of the reasons is that the mining companies don't provide growth. And right now there's excellent opportunities for investors and also the major mining companies to take advantage of this really, really low pricing that's still there amongst the smaller cap companies in the business.
Thank you. Rob?
Being from Vancouver, you probably all heard that we have a bit of a reputation now for being, liking the wild and woolly investments. I will say that you probably all heard of Frank Justra. The word on the street is that he's been retired for 10 years, but he's now back in the office full time. And that team in particular is reviewing deals every single day. Somebody told me 25 years ago that the best way to make money in this business is not necessarily by being the smartest person in the room. It's just finding the right people and then writing the check. And so when someone comes to you with an opportunity and they say, write the check, whatever your level is, just write the check, because they will come back to you 6 months later and 6 months later again. And some of these checks that you write are going to turn into huge wins. And if you want to find that 10x, that 15x, that 20 times your investment, the only way you can do that is by putting your money down. So, and it's fun.
And Bela, just to wrap, as the money moves from from this end to the where we step into the fray.
Yeah, as mentioned earlier, I see a lot of positive momentum. There are a lot of projects. We compare to the time. Sometimes you compare it to the time when oil was invented. What is going on now with the lithium market, with the critical minerals? there are lots of investments in Canada, in the US, in copper projects. I see a lot of projects, still in the early stages, but projects that's come to life in the next couple of years. So I think it's exciting times ahead, and so we're very happy to be part of it and join that.
Super. Well, thank you. Thank you, everybody, for attending. Tamara, Patrick, Rob, and Bella. Thank you.